Imagine America just before the Civil War. Travel was slow, and finance was a mess. Every state, almost every town, had its own banks, issuing their own paper money. Thousands of different notes circulated, many of dubious value. You might accept a dollar bill in New York, only to find it worthless in Ohio. This fragmented, confusing system, often called Wildcat banking, made interstate commerce a nightmare and left the nation financially vulnerable. Then, in 1861, the unthinkable happened. Civil War erupted. The Union, unprepared for such a massive conflict, faced an immediate and staggering financial challenge. Armies needed to be raised, clothed, fed, and armed. Fortunes were required overnight, but the federal government had little capacity to raise them. Its treasury was meager, its credit untested by total war, and its financial tools were utterly inadequate for the scale of the crisis. The conflict quickly escalated beyond anyone's imagination. Daily expenditures soared into the millions of dollars, a sum astronomical for the era. Traditional funding methods like tariffs and land sales were woefully insufficient. The government needed money, and it needed it fast, in unprecedented quantities. This financial pressure was immense, threatening to collapse the Union's war effort before it truly began, creating an existential crisis for the young nation. Enter Salmon P. Chase, President Lincoln's Treasury Secretary. Chase was a man of immense ambition and intellect, tasked with nothing less than saving the Union financially. He understood that conventional approaches simply wouldn't work. The nation's financial structure, designed for peacetime, was cracking under the weight of war. Chase needed bold, innovative solutions, ideas that would revolutionize American finance forever, or the Union would fail. Chase's first attempts at funding involved traditional war bonds and loans from private banks. While patriotism was high, the sums raised were insufficient. Banks, too, operated under the old, fragmented system and couldn't mobilize capital quickly enough or on the required scale. The federal government simply lacked the infrastructure to access widespread capital effectively. This initial struggle highlighted the deep structural flaws in America's financial architecture. As the war dragged on and expenditures mounted, Chase faced a stark reality. The Union was running out of money. Desperate times called for desperate measures. The radical idea of printing paper money without immediate gold or silver backing began to circulate. This was highly controversial, a direct challenge to deeply held beliefs about sound money. But necessity, as always, proved to be the mother of invention in this financial crisis. In 1862, Congress passed the Legal Tender Act, authorizing the issuance of U.S. notes, which quickly became known as Greenbacks due to their distinctive green ink. These were the first federal fiat currency in American history, declared legal tender for all public and private debts, except import duties and interest on government bonds. This bold move provided the Union with desperately needed capital, a financial lifeline in a time of dire national emergency. The introduction of greenbacks was met with a mix of relief and alarm. While they immediately eased the Union's financial crunch, public trust was not instant. Many feared inflation, and indeed, the value of greenbacks fluctuated against gold throughout the war. Critics derisively called them shinplasters, reflecting skepticism about their worth. Despite the controversy, greenbacks provided the liquidity essential for keeping the Union war machine operational. Greenbacks solved the immediate funding crisis, but they didn't address the underlying structural weaknesses of the banking system. The thousands of disparate state banknotes still created chaos, complicated federal tax collection, and hindered a unified national economy. Chase understood that a stable, uniform currency required a stable, uniform banking system. The war, paradoxically, offered a unique opportunity to fundamentally reshape American finance. Chase envisioned a national banking system that would centralize currency issuance, stabilize the financial markets, and create a reliable demand for federal bonds. His plan was ingenious: create federally chartered banks that would issue a single, uniform national currency. These banks would be required to buy U.S. government bonds, using them as collateral for their issued notes. This would simultaneously fund the war and overhaul the nation's banking structure. After considerable debate and legislative maneuvering, the National Banking Act of 1863 was passed. This groundbreaking legislation allowed for the chartering of national banks, supervised by a new federal office, the Comptroller of the Currency. These national banks would issue their own notes,
But these notes would be backed by U.S. government bonds held in deposit at the Treasury. This was a monumental step towards financial integration. The initial uptake of the 1863 Act was slower than Chase hoped. Many existing state banks were reluctant to convert, enjoying their freedom from federal oversight. However, the framework was set. The ability to issue a uniform currency backed by federal bonds offered a powerful incentive. This act started the slow but inevitable transition towards a more centralized and stable financial environment, a stark contrast to the previous chaos. Realizing the 1863 Act wasn't converting state banks fast enough, Congress passed a revised National Banking Act in 1864. This version refined the system, offering clearer benefits for conversion. Crucially, it laid the groundwork for a tax on state banknotes, effectively pushing them out of existence. This legislative one-two punch aimed to compel uniformity, transforming the American financial landscape with federal authority. The decisive blow came in 1865. Congress levied a 10% tax on all state banknotes. This crippling tax made it economically unviable for state banks to continue issuing their own currency. Suddenly, thousands of different state notes disappeared from circulation, replaced by the uniform national banknotes and greenbacks. This act signaled the death knell for the Wildcat banking era, forever changing how Americans handled money. For the first time in American history, the nation had a truly uniform currency. Whether you were in Boston or San Francisco, a dollar bill looked the same and held the same value. This standardization eliminated the confusion and fraud that had plagued commerce for decades. It was a tangible expression of national unity, forged in the crucible of war, making transactions easier and boosting interstate trade and economic integration.
Beyond currency reform, the National Banking Acts were brilliant war financing tools. By requiring national banks to hold government bonds as collateral for their notes, the acts created a powerful, stable market for Union debt. This ensured a consistent demand for war bonds, which directly funded the massive military operations. It was a symbiotic relationship. Banks profited, and the government gained reliable access to capital. As a result, national banks proliferated across the country. They became cornerstones of local economies, providing credit and financial services under federal supervision. Their stability, backed by the U.S. government, instilled public confidence, a stark contrast to the often risky state-chartered institutions of the past. This new system created a more resilient financial infrastructure for the war-torn nation, ready for post-war economic expansion. The era of wildcat banking, characterized by thousands of unregulated, often fraudulent state banks issuing unreliable currency, was finally over. The national banking system brought unprecedented order and accountability. Gone were the days of uncertain currency values, replaced by a federal standard. This meant fewer bank failures and greater protection for depositors and businesses, a fundamental shift from chaos to controlled stability. These financial reforms profoundly increased the power of the federal government. For the first time, Washington had significant control over the nation's currency and banking system, a power previously fragmented among the states. This centralization of financial authority mirrored the broader consolidation of federal power that occurred during the Civil War, laying important groundwork for future national economic policymaking and regulation. Salmon P. Chase's contributions to American finance cannot be overstated. His courage to push for fiat currency and a national banking system in the midst of war was pivotal. Though he later served as Chief Justice of the Supreme Court, his tenure as Treasury Secretary remains his most impactful, fundamentally reshaping the financial landscape and ensuring the Union's economic viability. He truly forged a modern financial infrastructure.
After the war, the stable national banking system and unified currency played a crucial role in America's rapid industrialization and economic expansion. Businesses could confidently transact across state lines. Investors had a clearer picture of financial stability, and the flow of capital became more efficient. The innovations born of wartime necessity became the bedrock of post-war prosperity, fueling decades of unprecedented growth. While the financial innovations were successful, they also left the Union with a massive national debt, which took decades to pay down. The cost of financing the war was immense. However, the new financial structures proved robust enough to manage this burden, even through the tumultuous era of Reconstruction. The Greenbacks themselves remained in circulation for a long time, evolving in status and eventually being fully backed by gold. Although the national banking system was a significant step towards financial centralization, it was not a central bank in the modern sense. It lacked the flexibility and power to manage panics and control the money supply effectively. However, it laid crucial groundwork, proving the feasibility and necessity of federal financial oversight, ultimately influencing the debates that would lead to the creation of the Federal Reserve System decades later. The story of the Greenbacks and the National Banking Acts offers profound lessons in crisis management. When faced with existential threats, nations often find the courage to abandon old orthodoxies and embrace radical new solutions. The Civil War proved that a government could effectively issue fiat currency and create a powerful, unified financial infrastructure when survival itself was at stake, forever changing economic thought. So, the next time you hold a dollar bill, remember its complicated lineage. The uniformity and stability it represents were not always guaranteed. They were forged in the crucible of America's deadliest conflict by desperate necessity and bold financial vision. The Greenback Revolution wasn't just about winning a war. It was about building the very foundation of modern American money and banking, a legacy that endures to this day.